You heard the fundamental case on Tesla, as you suggest technically that this stock is broken at the moment. Where do you think it's going from here?
Well, it broke 2 months ago, Scott, out of almost a 2-year head and shoulders pattern. And that coincided exactly with when Elon Musk said he was starting to sell shares or had sold shares. It's dropped 60% in under 4 months. It's been a big, big drop. So I do believe the risk reward for long-term investors is getting better. But technically, it's very, very difficult just to stick one's, neck out and say, here's the low based on fundamentals or anything. I think, the biggest fallacy on Wall Street is that it's immediately right to buy dips on something that's down 50%. If 2022 has taught us anything, it's that, that doesn't necessarily always work that well in bear markets. I mean, I think that when it gets down near 100, for me, by the end of the month, there will be some things that will line up to suggest the stock is a trading buy, and it could have a very sharp bounce. But I just think it's premature to think at that level is right here.
You think of, these issues with, when you think of technicals versus fundamentals, it makes it especially tough when the technicals are telling you something at the same time, Mark, that momentum itself has not only broken down, but it's reversed. Can you talk about the powerful effect of that phenomenon happening at the same time?
Well, as I've tried to always educate investors, it's best to use technicals along with fundamentals. And when they both line up, then typically you get very, very good investments and or trades. Technically, this stock broke down 2 months ago. So for those that are fundamentally oriented, it's wise to use prudent risk management to not be as, quick to buy dips and to hedge longs if you do such a thing. But, I'm not a real buyer right now. I would be looking, by Tesla's earnings by the end of the month, there is going to be some opportunity, I believe. And so, if the stock falls about 10% more, then it's going to be a very good risk reward. And I think the upside could be 30 to 50%. But as you mentioned, the stock is clearly broken. I mean, for intermediate term investors, we almost need to get up above the area where it broke down, 206, to really think that we're going to start a much larger rally, which is almost a double. So, and investors can't work that way. So you really have to look at buying dips. But once you see evidence of stabilization and or proper exhaustion, I mean, Tesla is just now getting oversold on weekly charts based on things like RSI that have reached, levels that we saw back in 2019, 2016. So, I think we're all on board, or most of us are, in what Musk is trying to do. The perception is anyway that, clearly, the stock has come a long way down in a very short period of time. I just view it still as being a very risky time to step in and buy just yet for those with short time frames. If you have a 3-month time frame, if you have a 12-month or longer, then it does likely make sense if you have the proper risk tolerance. But for those that are looking 2 or 3 weeks from now, I think it's going to be lower by the end of January.
Interesting. I appreciate that, Mark.